are traditional IRAs and 401ks, which are fully taxable when you take distributions from them. So if you're taking distributions from your traditional IRA, you're going to pay tax on the full amounts, which includes the principal and any growth. However, if you've been also putting money into any Roth accounts, so Roth IRAs or Roth 401ks, those distributions are not going to be taxable when you take distributions upon retirement age. With Roth accounts, you're not getting a deduction when you make the contribution originally. However, now the growth on these Roth accounts is tax-free. The principal you've already paid taxes on. So now you're going to take a distribution in retirement and not have to pay taxes on any of that. Whereas with the traditional accounts, so if you had a 401k or a traditional IRA through your employer and you were making contributions, you were getting a tax break then. You were getting a deduction. So you weren't paying taxes on the amounts that you were contributing to these accounts. But now upon retirement, you're taking a distribution, you're going to have to pay tax on the entire distribution amount plus any gains.